Hi guys, KP this side from InvestorWise. So we are going to do a stock analysis video today, and this time the stock which I have taken up is Rajesh Exports. This is one of the stocks I have been watching for last 1 month. A disclaimer right away is that most of my clients are holding this stock, and this stock is really testing the patience. We gave a buy recommendation earlier on this stock, maybe a month back or maybe a little more than that. I don't exactly remember. But then the target was done. The stock went past 600 odd bucks, and I think it did much more than that. But after that, it has again shown a lot of correction, and we have done a buy at around I think 485, 490 something. Most of my clients are holding this share. After that, I have been continuously keeping a watch on this stock, and now this stock is looking consolidated at its current price, and so we thought, okay, we'll go ahead with this as a general recommendation. I feel the percentage of downside risk for the stock is less. Fundamentals are very good, and that is why I thought, okay, we'll cover up this particular stock today. So I'll give you basic details about the company. First of all, Rajesh Exports is a company which was founded in 1989. It is headquartered in Bangalore. The company is involved in the refining, then designing and selling of gold plus the diamonds. They have very good exports for diamonds especially. The company has also been part of the Fortune 500 companies. That is one big thing. There are not many companies from Indian stock markets which are part of Fortune 500, but Rajesh Exports is one of those companies. Next is the company has done a revenue of $25,142 million in 2019, and it has been the 8th largest company revenue wise in India. It's a big company, and the stock is somehow not very visible in the markets, but I personally feel it's a very good stock. I'll just discuss more about it. The company was started by two brothers. One of them obviously was Mr. Rajesh, and they come from a very humble background. The company was started by them in Bangalore itself, and they started their operations in a garage with just 10 people working for it. And slowly and gradually the company started growing a lot. They have come into retail segment also. They came in retail segment in the year 1990 itself. If I'm not wrong, their IPO was introduced in the year 1995. Okay. In 2015, they have acquired a largest gold refinery in the world. That was in Switzerland, and they paid a massive amount for that, which was $400 million. The price, if I tell you about the price of the share, it has done a 52-week high of 780. This was done on 10th of February this year itself. So from 780, the low of this stock in 52 weeks is 464, which was done on the 19th June itself, which was last week. And surprisingly, like you would have seen most of my analysis videos, most of the stocks in India have done their 52-week low in the last week of March, especially 23rd and 24th of March, once this lockdown was announced and we came to know about this pandemic spreading in India as well, apart from the other parts of the globe. But this company has been so strong that it did not fall much in value at that point of time in the month of March. But somehow the company has done its 52-week low now on 19th of June. Current price of the stock is very close to its 52-week low, and I have told you this many a times. I personally love those stocks which are trading close to their 52-week low. If the fundamentals are good, I personally find them as a very good opportunity for short-term traders, or like if you can hold on to a stock for 2 to 3 months, I think it will do the magic. Okay, right now it is trading at 476. If I look at it from its 52-week high, there is a discount of close to 39%, which is good enough discount on the stock. And overall correction in the stock, when most of the stocks in the industry have shown a correction of 40, 45, 50, 60% also during this pandemic, this one stock has not shown a lot of correction. The total correction itself has been close to 39.5%, which makes us understand that the stock is very strong with its fundamentals, and as far as the price is concerned, the price is not very fluctuating, which actually is good in this kind of a market where we don't want to take too many chances with too much of wealth destruction happening in short span of time. So this seems to be a very stable stock at its current price and seems to be a very safe investment at this point of time. Okay, if I talk about the promoters holding, guys, promoters are holding 54% in this company. Everything is unpledged. Although the company has been criticized on many occasions for high debt it is carrying in its book, but the good news is promoters have been maintaining a stable 54% in the company, and that is completely free. They have not pledged anything for taking the debt. Because their revenues are so high, the company is getting debt easily in the market. That is one plus for them. The best part about this company, apart from the fact that it is a part of Fortune 500 companies, the best part about this company is that FII is holding close to 17.75%, which you won't find in many stocks in Indian market, with FII holding being as high as 17 or 18%. This company has 17.75% of FII holding, and even DII holding is close to 26.5%, which makes it very promising. Okay, if we talk about some of the fundamentals of the company, guys, the face value of the stock is only ₹1. Its EPS is 40.5 on consolidated basis. If you look at their total operations, 40.5 is a very strong EPS for a company with just a face value of ₹1. That is a very good number. If we do the PE ratio analysis, the PE ratio for this stock is close to 11 times, whereas the industry average PE ratio is close to 48 times. You can understand that this stock is trading very cheap at its current market price. The book value is close to 300 rupees, and price to book value ratio is just 1.59 times. I've told this on multiple occasions. The price to book value ratio, anything less than 3.5 is considered very decent. In this case, it is not even 2 times. So I feel the stock is reasonably priced compared to its reserves and all. The price is not trading at much premium. It's just 1.59 times. The company has a beta of 0.24, and that is where some people start losing interest in this company, because beta being 0.24 makes it very defensive. Stock में ज़्यादा movement नहीं है compared to the index. In fact, sometimes what happens is that in Sensex will be up by 500-600 points, but this stock may not be up by even 10 rupees. That is where people start losing patience. In fact, some of my clients are also repeatedly asking me, should I still hold it? Should I still hold it? I tell them, yes, you got to hold it, because there's nothing wrong with this stock. And from the point of time they have purchased it, we did not see a lot of fall in this stock. So there is no reason why we should panic. And the second thing is, I have seen its past trend. I have been tracking this stock for now more than 7-8 years. I've seen this, it suddenly explodes. And once it explodes, it just goes out of control. Like, it will show upside of 70, 80, 90 rupees in a day. So for a 400, 500 rupees stock, 70, 80 rupees of movement in a day is a huge movement, right? We understand that. So beta being 0.24 right now, given the markets, given the volatility, I would love to buy a stock which has just beta of 0.24, because that makes it very defensive, not volatile, and no big changes are going to happen in either direction. But as I told you, based on what I have been tracking, I have seen that suddenly on one particular day this stock explodes. So we are just waiting for that moment, and that is why I thought, why not everybody should get benefited by that. As far as their reserves are concerned, again, their reserves are very strong. They have more than 4,000 crores of reserves. Their share capital is just as tiny as 29 crores, which means they have solid reserves, guys. Their reserves to share capital is almost 142 times, which makes it a very strong company again. Guys, as far as their the sales, the revenue and the net profits are concerned, from 2015 March to 2019 March, during these 4 years, the sales have grown by 248%. I'll tell you the exact figures. In March 15 they have registered annual sales of 50,462 crores. Yes, just hear that number out, 50,462 crores. That's why it's the 8th largest company in India revenue wise. 50,462 crores was their revenue in March 15. In March 19, that number has grown up to 175,000 crores. 1,75,000 crores is their revenue in March 2019. March 20 results are not out, so I thought, okay, we'll take the data of last year, which makes a growth rate of 248%. That is absolutely stunning growth. As far as the net profits are concerned, net profits have almost doubled from 654 crores in March 2015. It has become 1292 crores in March 2019, showing a total growth of 98%. Obviously, we will be interested to know how the company has done in last 1 year. So last 1 year, There's a disturbance. There's a flight going on. You can just it's okay. So my house is very near to the airport, so every time the flight goes, there will be some disturbance. And because the weather is too good, so I did not want to do it on my system like I usually do the videos. I wanted to make it on the terrace. Okay, coming back to this discussion, December 18 to December 19, if we look at this 1 year data available, so sales have grown up by only 4.76%, but the net profit is down by 9.28%. Probably that is the reason why stock is under pressure. But then I again told you guys, last 1 year has almost been a recessionary phase for us. In that, small fall in the net profit does not make a lot of differences. It's okay. That does not change the overall fundamentals of the company. Company is still looking very strong with its other numbers which we have discussed. Yes, as I told you, most of the analysts are not happy with this stock for the sake that it has very high debt. But I've told you this many a times. Companies which have good revenue, they have good earnings before interest and taxes, that is EBIT, they can manage with high debt because they have enough profits to pay off their debt. If the idea of taking debt is to expand your business operations, then ultimately it is the shareholders who are going to get benefited by that. We can't be in a theoretical world where we just say ज़्यादा debt है तो company बेकार है. If you talk like that, then Reliance is the worst company, at least till the time they did not start selling off their stakes. And as I told in my last video also, selling stake to reduce your debt is anyways not a great sign. Does not speak very good about your fundamentals. That's the most easy thing to do. You sell your stake and you reduce your debt. So as far as Rajesh Exports is concerned, if my sales are good, if I have a dominance in the market, I don't mind having too much of debt. Ultimately, that debt is being used for benefiting your shareholders. Shareholders are people like you and me and big stakeholders. Still, March 18, they had a total of 8,600 crores of debt. Good news is, during March 19, they almost paid 2,500 crores of debt, which again goes on to show that intention of the company is not to keep the debt in its books if they are not doing enough operations to justify it. If my demand is going down, if my production is going down, probably I would love to pay back my debt and reduce my interest burden. Company has done that. They have paid back 2,500 crores of debt during this 1 year period from March 18 to March 19. Still, if you want to analyze the debt further, if we look at their interest coverage ratio, guys, their interest coverage ratio is 4 times, which means company has enough earnings to pay off their debt. Any ratio close to 1 is bad, but in this case, the ratio is 4 times. More is better in case of interest coverage ratio. So in this case, we are fine and comfortable with the debt that company has because it is just, the interest coverage ratio is 4 times, which is very good. Apart from that, company has a decent return on net worth and return on capital employed. Another plane, bye-bye. So they have their return on net worth is 14.61% and their return on capital employed is 19.7%, which is again good as far as I can understand. Apart from that, guys, now if we talk about the current pricing, which is 477, and its 52-week low has been 464, I guess. Yeah, 464. So stock is already very close to its 52-week low. But I've been very responsible before making this video. I have done a close monitoring of this stock for last couple of weeks, and I feel that the stock has consolidated, and I don't see any reasons why stock should go down. So even on Thursday, I think the markets were down and still the stock did not go much down. So I am very bullish on this particular stock. If you can show some patience and hold on to this stock, I feel at its current price, you can definitely go for buying this stock. If the stock goes down, unfortunately, keep your first trigger point of 435. At 435, I feel you can add 25% shares more. So suppose if you have 100 shares, you add 25 when it goes down to 435. Chances are very less for that. If chances were more, I wouldn't be making this video. If it goes down further to 400 range, which again I feel is less of a possibility, but if it goes down to 400 range, then you can add another 25%. Means if you had 100 shares, you added 25 at 435, you add another 25 at 400. After that, you can continue holding the stock. I personally don't recommend exiting it, but if you are a short-term trader, maybe you can keep your stop loss from current price of 477. You can keep your stop loss at 457, and at 457 you can exit this stock if you don't want to hold on to it for a long time. My target for the stock, there is some resistance in the range of 490 to 495, but I still feel the target for the stock, the first target which I would like to say is 520 That is where I see 515 plus you can book the profits. But I feel it will touch 520 in short span of time. If you can hold on to it a little longer, maybe you can look for targets of 550 odd bucks, which will be a very, very good return on this stock at its current price of 477. If we can get 550 even in 3 months time, I think we should still be happy with the kind of investment we are doing. So I hope you like the videos, guys. Apart from that, if you want me to cover any other topics, let me know. And if possible for you, please share this video so that most of the people, all 6 videos I have made on stocks you have seen, have done stupendously well. We want maximum people to benefit from it because you're not paying anything for it. So it's good if you can please share these videos with other people you are familiar with, so that most of the people should benefit from all these videos. Before making videos, when it's going as a general recommendation, I am very, very sincere in my efforts to keep watching a stock for weeks. Only after that we make a video on that. Till we meet again, guys, bye bye. God bless all of you. Thank you.